we have 3 of you. So the meeting is being recorded. So we shall go directly to our past paper. So today we are going to do preparation of the final account or partnership, and to be specific, we shall do retirement of a partner. So in the case where the partner is retiring, so retirement of partner. The retirement of a partner. So yesterday we did admission and changes in profit and ratio. So today we are going to do retirement of a partner. Now, so there's difference between retirement and dissolution. So there is difference between retirement and dissolution. The dissolution is quite different. Now, what we need to remember is that when we are doing what we call the retirement of a partner, we need to revalue our assets. So we need to prepare the revaluation account, and also we need to do the working for goodwill. So 2 items are necessary. Number 1, we need to maintain a revaluation account, and number 2, we also need to maintain the goodwill account. Either the goodwill is being retained or either the goodwill is being written off. So we need to do those working. So when we talk about retirement of a partner, we shall be talking about those 2 things. And the same approach will be used in the case where we are also doing a death of a partner. So same adjustments will be applicable in the case where we are talking about the death of a partner. Now, without wasting time, let us go to our past paper. Open your past paper, December 2024, past paper. December 2024 past paper. December 2024 past paper. December 2024 past paper. The question is question number. Let me see what the question is. What last sitting? Those who did the last sitting. Question number 2. So December 2024, question number 2. So we are saying preparation of final account of final account of partnership, and to be specific about the retirement of a partner. Retirement of a partner. Those who are joining now, this starts for you pay. So who will read for us the question? So who will read for us the question? So preparation of the final account. Preparation of the final account. Preparation of the final account of partnership, and to be specific, it is the retirement of a partner. Retirement of a partner, to be specific. So December 2024 question number 2. December 2024 question number 2. It was 20 marks. December 2024 question number 2. It was 20 marks. 20 marks. So December 2024 question number 2. So that's class sitting. Someone to read for us. Someone to read for us. Nada Somia. Anyway, let me read it. No, Anne, Ben, and Chad have been operating as partnership business under the name ABC Ltd. The partnership agreement provides a profit and loss ratio 5:3 is to 2. 5:3 is to 2. On December 2023, Anne retired. Now, Anne retired. So, mark the date. So, Anne retired on that 1st December 2023. So, kumbuka Anne retired. So, let us mark the date. So, Anne retired. Now, I to be specific, Anne retired on which date? That is 1st December 2023. That is 1st December 2023. So that's the period when Anne retired. So you need to mark that date. The following balances were extracted from the books of from the books for the year ended 30th June. So their accounts zinaisha on 30th June. So remember, as this December. So their financial statements in Aisha June and not December. So you need to know that one also. So we have the trial balance there. So we have the trial balance. We have those items. You can see them. We are not interested with those items. You can go to additional information number 1. Inventory also valued 1620 and 1800 on 1st July 2023 and 30th June 2023 respectively. So one is at the beginning, the other one is at the end. So we have both opening and closing stock. Number 2, as 30th June, rent and rest prepaid advanced amounted to 200,000. That's an accrual. So you know what we need to do by accrual. Number 3, as at 30th June, general admin express accruing amount 88,000. Also an accrual. That one is okay. Then the partners made the following drawings. So we have those drawings and the periods you can see there. Depreciation was provided in that follow. We have allowance for bad debt to be increased to 48,000. That one is okay. We have balance due to earn. The balance due to earn was to remain to the partnership carrying no interest. Now, wakati Anna retire, Anne needs to be paid his or her balance. So her balance. So Anne needs to be paid her balances. Now, in that case, she will be paid. So Anne will be paid at the end of that year. So, and that balance haitakuwa ina attract any interest. So it will remain in the business until the year, at the end of the financial year, so that she can be paid. That one is okay. We shall compute the amount which she need to be paid. Next, the value of the value of the partnership goodwill as that 1st December 2023 was agreed by the 3 partners was 4 million. This was not to remain in the books of partnership. So that means it's supposed to be written off. So the goodwill must be written off. And then on that 1st December 2023, partners agreed to revalue their land upwards. So there was a revaluation. So we need to prepare a revaluation account because we have a revaluation. Then assume profits accrued even through the year, meaning half. So when we say assume profits accrued even through the year, you kumaanisha that before we need to prepare the financial statement before retirement and after retirement. So we shall have 2 accounts. So one before retirement and the other one after retirement. So let us write and say ABC partnership income statement for 2023, and then the final one, that one is 30th June 2024. 30th June 2024. So we start with the sales. So what's our sales from the question? Let's go to our trial balance. Let's go to our trial balance. Huko June. Now the sales ni ngapi? Naona sales ni 98.80. Is that correct? 98.80. So sales bracket total. So that is 98.80. The question is in thousand. Wamesema that the profits and the expense accrue throughout the year, meaning we shall share them equally. You get to that word inamaanisha equal. So divided by 2, so each period itachukua half half. So each period, so before retirement and after retirement, itachukua half half. So let me find a calculator. Kuna calculator kweli bwana. Nimepata calculator. So divided by 2. So that's 98.80 divided by 2, 49.40. So kumaanisha this period ilikuwa 49.40. And this one is 49.40. Then you are supposed to less cost of sale. Cost of sales. Now, cost of sales, we start with the opening stock. Opening stock. So what's our opening stock from the question? Opening stock. So information number 1, or information number 1, opening stock is 1620. So to make it in thousand, so 1620. Then you're supposed to add purchases. Purchases kwa swali pale juu ni ngapi? 5820. Can you say 5820 purchases? 5820. Then we less closing stock. Do you have drawings? There was drawings in our additional information, but wakutuambia kama those drawings relates to goods. Kama hajatuambia we ignore. So closing stock information number 1, 1800. So closing stock, you're supposed to less 1800, so that we can get the cost of goods sold, so that we can get our gross profit. So let's get the cost of goods sold. So commercial is 1620 plus 5820 minus 1800. So total is 56 40 total. So total is 56 40. Now we divide by 2 because I remember inventory. So 28 20. I'm going 28 20. Now we can get so 49 40 minus 28 20. 21 20, which is the same. 21 20. And then times 2 because of the same. 42 40. 42 40. Which you call 98 80 minus 56 40. 42 40. That one is okay. Now we can let's now do you have any income? Now, do you have any income? We need to check first if you have any income. In our trial balance, we do not have any income. But if we go to additional information, do you have any income? Now, information number 6, we have allowance for bad debts. So it's an increase. So you are sure to it's an increase, so we ignore. So can to increase, it's an expense. We can decrease, it's an income. So number 6, allowance for doubtful debt to be increased. So to be increased. So get to the word increase, join an expense. So we don't have any income. We don't have any income. Revaluation, we have a revaluation gain. Now that revaluation is our capital account or the current account. So that revaluation is our capital account. So revaluation will go to capital account. So that one tonight, you know. Now let us start with information number 1. That's in inventory to tumeshafanya. Number 2, we have rents, rent and rates. So we start with the rent and rates. So you do a working. Now rent and rates uko juu kwa our staff uko juu. Rent and rates in 500. Which is 500. Now but information number 2, we have a prepayment. So what do we do about prepayment? We are supposed to raise. So prepayment was 100 shillings. So we paid by an extra 100. So remember that will be also an asset. So hiyo itakuwa 500 minus hiyo itakuwa ni 400. 400. Then remember to less, to divide by 2. Each period will get each same. Kutoka kwa rent, tukitoka kwa information number 3, general administrative expense. General expense, so nitaandika tu general expense because of space. Now, general expense kule juu kwa total balance, it is 284. It is 284. 284. Then information number 3, it was an accrual of so general expense had an accrual of 88. So we are supposed to add it back. So accrual we had. And I had explained this item. So, and remember, 88 also will form part of, will also form part of liability. So 284 plus 88, itakuwa ni 372. Now we divide by 2. So 186, 186. Now to talk about general expense, information number 4 is about drawings. Drawings go to the capital. We go to the capital account, sivyo? Not capital, I mean current account. So drawings inaenda kwa current account. So hiyo tunachana nayo. So drawings will go to the current account. We have depreciation. We need to consider that one. Depreciation. So rather than the first one, the first depreciation pale naona ni building, and it is on straight-line basis. So kumaanisha it's on cost. Straight-line basis, meaning it's on cost. So building ni 2%. 2%. Now 2% times what? Now what's the cost of building huko juu? So the cost naenda kwa cost. Unaangalia building on cost. Building on cost ni 6,400. 6,400. So 0.02 times 6,400. 128. Remember to divide by 2. 64. 64. To talk about building, we have another information number, same information number 4. Number 5, equipment 15%. So we have equipment 25%. So remember on straight line, it's not 25, it is 15. And remember it's on cost. So remember it's on cost. So unaenda kuju tunaangalia on cost. Equipment on cost ni 960. 960. So 0.15 times 960, which is 144, divided by 2, 72. 72. Tukitoka kwa equipment, tukitoka kwa hiyo tunaenda kwa allowance for bad debts. So allowance for bad debts. Allowance for bad debts. Now wametuambia it will be increased to how much? So allowance to be increased to 48. Now let's go to our trial balance. So what's our allowance for doubtful debt? The trial balance. So tukienda kwa trial balance here, do we have allowance for doubtful debt? Yes, we have it. 42. So this one is 48. So ukienda kwa trial balance ni 42. Kwa nini information is 42? Kumaanisha the increase is how much? That's our expense. 48 minus 42. That's the 6. This one is the increase. So kumaanisha hapa ni 3. Na hapa ni ngapi? Ni 3. Hata kitu kwa kumaliza. So tukitoka kwa allowance tunaenda kwa balances for earn, ndio tutafanya value for partnership, tutafanya gani nyingine hakuna. Let's go to our income statement, tuangalie any other item. So land it's not an expense. Building not an expense. Equipment not an expense. Accumulated depreciation we ignore. Trade receivables not an expense. Trade payables not an expense. Allowance for bad debts we consider. We have an increase of 6. Cash at bank we ignore. That is not it's not an expense. Capital account also not an expense. Current account not an expense. Purchases we have considered. Sales we have considered. Staff salaries. Staff salaries, that's an expense. Staff salaries. Now, staff salaries from this part, 1172. 1172. Then we divide by 2. 586. 586. That one is okay. Rent and rates to may consider. General administration expense to may consider bad debt season of Bado. So bad debt written off. Bad debt written off ni ngapi? Is 18. So 18. Kumaanisha half ni 9. Now let us compute now the net profit or loss. Net profit or loss. Net profit or loss. So itakuja ngapi? So tuanze na ile 4240 minus 400 minus 372 minus 128 minus 144 minus 6 minus 1172 minus 18. This is 2000. So kumaanisha divide by 2. So hiyo ukiminus lazima upate 1000 na pia ukiminus lazima upate ngapi? Because the profit and losses accrued evenly throughout the year. So they were apportioned equally throughout the year. Now with that one, I think hadi hapo tuko sawa. Now let us do appropriation account. Now appropriation account, we are supposed to add back. What are we supposed to add back? Drawings. Interest on drawings. You're supposed to add back interest on drawings. You don't have interest on drawings. And then you are also supposed to add back interest on drawings, of which hakuna. You're also supposed to less interest on capital, of which pia we were never told the interest on capital. So hatukuambiwa the percentage, so we cannot compute. So kumaanisha hakuna.
Nafanya tu venye roho itaniambia. Si venye roho itani.
Nani wa roho? Roho imefanya nini? Rorin. Hiyo ni sauti yako. Rorin, is that your sound? Now residual, it will be 1000. Residual profit. Rorin, unasemaje? Now that's the rest. We don't have interest on drawings and the interest on capital. So we are supposed to add interest on drawings and we less interest on capital, but we do not have any. So kama hakuna, tunaweka dash. There was no any percentage. Hatukuambiwa that the 10% interest on capital or 10% interest on drawings. We were never told. Now we can now share the profit. Share of profit. They were share of profit. So walikuwa ngapi? Walikuwa watatu, ABC. Partner A, partner B, and partner C. So remember, partner A is the one who's retiring, the Ann. So Ann atakuwa in your period 1. But the period 2 kutoka 1st January mpaka June hatakuwa. So let us see the ratio. Now the ratio of these two partners initially, their ratio wacha niandike hapa, A is to B is to C, ilikuwa ni 5:3:2. 5:3:2 if I'm not wrong. So kumaanisha huyu wa kwanza ni total ni 10, 5, 6, 7, 8. So tukianza na huyu, tuanze na partner A. Partner A itakuwa ni 5/10 times 1000. Huyo mwingine itakuwa ni 3/10. 3/10 times 1000. And then partner C atakuwa ni 2/10 times 1000. So let us find the figures for that one so that the balance hapa itakuwa ni 0. So itakuwa ni 5/10 times 1000. So huyu atapata 500. Huyu mwingine apate 300. Na mwingine 200. So when you less atakuwa now, then in the next period partner A hayuko. So kumaanisha total hapa ni ngapi? Ni 500. So kunachukua 500 plus 0. But after retirement tunabaki na partner wangapi? Wawili. Tunabaki na B and C. Now B and C ndio wanabaki. Now, B and C, they were to share the profit equally. Now, equally 1:1. So they were to share 1:1, which is equals to 2. So we have to call a half. So a half of this amount, 1,000. Ngapi? Sorry, B. So a half times 1,000. Atachukua 500. And then mwingine pia atachukua a half. Kwa sababu huyu wa kwanza yuko for Ann yuko tunajua ana retire. 1,000 itakuwa ni 500. So kumaanisha huyu atakuwa tumesha share profit yake total. Na total huku itakuwa ni so 500 plus 0 ni 500. 300 plus 500 ni minus 800. And then 200 plus 700 ni minus 700. The total inakuja 0. So that is the share of profit. So we are interested with these figures: 500, 800, and 700. Yes. Nani huyo? Tuko sawa? Now, as I said, when we are talking about the retirement of a partner, we need to calculate goodwill and revaluation. Let us start with the goodwill. Let us start with the goodwill account. Kama tu ya jana. So goodwill treatment is the same. So kama ya jana, goodwill. So we start with the goodwill account. You guys itatoshea hapo, but hopefully itatoshea. Okay, goodwill. So goodwill account, so we need to prepare the goodwill account. So information number what? So goodwill account is information number, if you go to information number what? Information number 8. The goodwill for partners was 4 million. So tunaanza na goodwill itself. So goodwill. So we have partner A, B, and C. So I share into the ratio of 5/10, 3/10, and 2/10 times 4 million. So remember it is in thousand times 4 million. That times 4 million. So which is 400,000. So inakuja ngapi? So 5/10 times 4,000. This is 2,000. Tukiweka 3, 1,200. Then tukiweka 2 ni 800. Nataka nimalize class haraka. Nasikia nimechoka bwana. So total inakuwa ni 4. Then we write out of. So goodwill written off. So now kuja kuandika goodwill written off. So B and C only, of which the ratio in a change to, they will share the ratio equally. So after the goodwill is written off, they shall share the ratio equally. 4,000. Then is 2,000. And also 4,000, which is 2,000. Then total 4,000. Now, apart from that one, so another account shall be maintained. Now, when we talk about retirement, mostly we need to prepare 2 accounts. For admission, just prepare the goodwill account, where the goodwill is to be written off. Just prepare the goodwill account. Either the goodwill is written off or not, you need to prepare the goodwill. That is for admission. But when we talk about the retirement of a partner now, 2 accounts must be maintained. So the first one is the goodwill, and the second one is the revaluation account. Is the revaluation account. Revaluation account. And we had only one revaluation from the question, and that was information number what? Number 9. On that 1st December 2023, partners agreed to revalue the land upward by 32. So land. So land was revalued. Tunakuja andika land. Then we complete the revaluation. So it was revalued to 3,200. What was the value initially in our trial balance for land? So it was revalued to 200. So what was the increase? So in our trial balance, the value for land was 2,400. So 2,400. No any other account. So then no any other account was revalued. So that's 200 minus 2,400. That is 800. Now that evaluation we shall share it to the partners. So that evaluation we shall share it to the partners. So we shall share it to the 3 partners before retirement. So partner A, B, and C. So because that evaluation was done where the partner was already there. So the partner was already there. So all the Anne was still there. So during the time of evaluation, Anne was still there. So tunasema share of gain ama share of evaluation. So this share of evaluation will be shared among the 3 partners because all the 3 partners were there during the time of evaluation. So tunaanza the first one, 5/10 times 800, B, 3/10 times 800, number C, 2/10 times 800. Then our total must be equal to 800. Then that account itakuwa imebalance. Itakuwa imebalance. Now that's 5/10 times 800. 5/10 times 800. So huyo anakuta 400. Mwingine anakuta ngapi? Mwingine anapewa yake tofauti. Na mwingine anapewa ngapi? 160. So wanakula hivyo. So that's the revaluation. You need to prepare the revaluation. And we only had one revaluation, and that was land. There was no any other revaluation. Now we need to prepare the capital account and the current account. We start with the current account. Let's start with the current account, then tunamalizia na capital account. So current account, so partners current account. Do you want me to drop this part? Kama itatoshea hapa chini. Just allow me to drop this part. So I hope umeandika kila kitu. Navuta mpaka kwa appropriation account. So navuta mpaka hapa kwa appropriation account because we need this appropriation account. We need the appropriation account. So we need this appropriation account from net profit to the other items. So we need them. So navuta hadi hapo kwa appropriation account. The appropriation account. So I think hapo iko sawa. So hadi hapo kwa appropriation account. So we start with the partners current account. Partners current account. Partners walikuwa watatu. So partners walikuwa watatu. Tunaanza na C. I think that one is enough. A. Walikuwa watatu na A. Think itatosha hivyo. Then tuweke that part ya details. Then C. B. Na A. I think itatosha. Let us start with the balances. So tuanze na current account. So current account balances. So we have a balance breakdown. Balance breakdown. So for A, so tuenda kwa A current account pale juu. A credit balance. So that one is under credit balance. Unaweka hapo. Haya, debit balance. So we have a debit balance also. Balance breakdown for B, the debit balance. 40 kumaanisha B side hayuko. And then C ni credit balance ya 40 kumaanisha hapa hayuko, hapo hapa. I think that one is okay. Now let us consider the items which affect the current account. Number one of that item is interest on capital. And did you have interest on capital? Hapa, look at this. So interest on capital hakuna. So we know it. We can write interest on capital, but hakuna. So interest on capital. Interest on capital hakuna. Also, that one is fine. Now the only item we have is the share of profit. Hata kuja tuandike hizi vitu na tuwestia space. So hakuna. So share of profit. Share of profit ndio tu ilikuwa. So share of profit ndio ile tu ilikuwa peke yake. Wengine interest on capital, interest on drawings ilikuwa 0. So share of profit we have 500. Partner A huyu anakula 500. Huyu anakula profit ya ngapi? Partner B anakula profit ya 800. Ndio hapa. Then C anakula the total profit yake ni ngapi ya C? 700. 700. Then remember we have interest on drawings on the other side. So what we add here, we are supposed to less it on this side. So what we added, we less it on this side. So interest on drawings hakuna. So interest on drawings hakuna. Interest on drawings hakuna. So we balance this account. But we have drawings. We have drawings. So tulikuwa na drawings. So tutaweka drawings. So drawings iko pale kwa swali yetu. Drawings ni ngapi? Anakula akona 420. Alikuwa amechukua goods items worth 420. Hatujui kama ni stock ama ni nini. So hatujui. So tunaweka direct hivyo. 740. 740 na pia 720. So alikuwa amechukua some items there. You can see them. Now, tukishafanya hivyo, I think now there's no any other account. So let's balance this account. So balancing figure itakuwa side kubwa ni gani? I think side kubwa. And remember Ann is retiring. So ukumbuke Ann. Uweke star Ann. Weka star Ann. Remember Ann is retiring. So tutaanza na Ann. Tuanze na wengine. So we need to have balance. Carry down. So let's tuanze na ule wa kwanza, ule ni 740. Kumaanisha hapa ni 740. Balance ni ngapi? The balance carry down ni 20. Huyu ni 800. Na hapa ni 800. So kumaanisha balance carry down ni ngapi? Balance carry down ni 740 plus 40 ni 780, 20. So 20 ama 40? 20. 780 itakuwa ni 20. Then this one ukumbuke ana retire. Let us see how much ako nayo. How much pesa ako na pesa ngapi? This person has 560. So kumbuka huyu jamaa ako na 560 pesa. Lakini lazima tumkate kwanza before aende because ana retire. Ndio ako na 560 kwa current account. Lazima tumkate pesa yenye alikuwa amechukua kama drawings kwa biashara for personal use. Remember drawings is when you take something from the business for personal use. So alikuwa amechukua 420. Now if we lazima tumkate, so 560 minus 420 itabaki ngapi? So how much itabaki ukimkata hiyo 520? So 560 minus 420 atabaki na 140. Now this 140 ukumbuke hii 140 it will not be a balance carried down. The reason why it will not be a balance carried down because this person is going and retire. Kumaanisha we don't need balance yake in the next period. We want to pay this person. So tutamlipaje? We are going to pay him with a bank. Tutamlipa na bank account. Tunaandika bank. So bank and then we go to a bank account. Tuangalie kama tuko na pesa tumlipe 140. Tuko sawa because this person is going. Lakini kama angekuwa anakaa tungeweka balance zake kama kawaida. So this person will not have any balance. Will not have any balance because this person is going. So kumaanisha the balancing figure for Anne because Anne she's retiring. Because she's retiring, we need to pay her 140. Ndio aende kama tumeshamlipa deni yake. Now, let us see for capital account. Tuone pia capital account, tujue deni yake itakuwa ngapi total. So we want to compute the total amount that we need to pay, and ndio aende kama tumemlipa sisi, asirudi kutuitisha pesa. So partners. So tunajua tuko na deni yake ya pesa ngapi? We know tuko na deni yake ya 140. So that one we put it in our mind for now. Tuko na deni yake. We shall pay her. Now, before to mlipe, let us compute the partner's capital account, because also we need to write off everything concerning Anne. So ndio aende asisemange ati hatukumlipa. So we need to pay her.
Unaweza rudia hapo.
Wapi hapo?
Kwa Anne.
Kwa Anne, sawa. No worry, don't worry. Now tunasema Anne balance mwaka ikianza alikuwa na balance capital account. Remember the capital account, the current account is the contribution that you make. So ukiingia kwa partnership, kuna pesa wewe unatoa as your contribution. That contribution mwaka ikianza alikuwa na balance ya 60. So alikuwa na balance ya 60. Aya, at the end of the year tuka make profits. Now your profits tuka share among them. So yeye alipata profit ya 560. So kumaanisha yeye pesa yote yako nayo kwa hiyo kampuni, kwa hiyo partnership ni 560 during the end of the year. Lakini we need to consider pesa yenye alikuwa ametoa kwa kampuni. So initially during the year alikuwa amechukua amount worth for 20, lakini hakuwa amelipia. So remember drawings, wakati umechukua kitu kwa kampuni lakini haujalipia. Now lazima alipie for 20 before tumlipe E560, because hii ndio balance yenye tunajua ako nayo. Lazima alipe kwanza for 20. So the total balance yenye alikuwa nayo mwaka kisha ni 500 plus 60, which is 560. Then 560 tulipe ile deni kwanza yenye alikuwa amechukua kwa mwaka. So alikuwa amechukua drawings ya for 20. So tukilipa hiyo for 20 out of this capital, tunabaki na 140. Na 140 haitakuwa balance carry down. Reason why? Because the partner ana retire. But kama hangekuwa ana retire, tungeweka balance carry down as 140. Lakini because the person is retiring, we don't need the balance for this person kwa sababu atakuwa next period. Tunaweka balance ya B na C 20 na 20 kwa sababu hapa na balance. Reason why? Because they will be there in the next period. Watakuwa in the next financial year. So they need to have their balances to be carried forward to the next period. But because Anne is retiring, we does not need to maintain her account again. We write everything off and we pay her. That's why tunasema the balance yake we shall not put the balance for Anne. But what we do, we shall transfer this amount to bank so that bank fanye nini? Imlipe pesa yake. Tuko sawa hadi hapo?
Yes.
Aya, let's go now with balance. So Anne alikuwa na credit balance ya 3600. Ben alikuwa na 3400. Na Chad alikuwa na 3200. Remember Anne is retiring. Remember Anne will not be there. So weka star. Just remember Anne will not be there. Let's consider some items which affect this account. One of them is the goodwill. Another need a goodwill. So goodwill always affect capital account. Goodwill. Now goodwill before. So another like goodwill before. So goodwill, and then the other side huku itakuwa ni goodwill written off. Written off. So huku ni goodwill, the normal goodwill, and then on the debit side itakuwa ni goodwill written off. So tunaanza na gani? So huku inafuata niandike kwa kubwa kidogo. Goodwill written off. Ika inaonekana. Let us start with the goodwill. Now tunaanza na goodwill on the debit side. So on the debit side inakuja on the credit side, ukumbuke hivyo. On the debit side inakuja on the credit side. So itakuwa ni 2000. So wana share among the partner, and then 800. Then we write it off. So remember A atakuwa now because N anaenda. So we write off. So huyu atabaki na 2,000. Mwingine 2,000. So on the credit side, inakuja on the debit side. Another one we need to revalue is the revaluation. Revaluation always affects the capital account. Revaluation. Now revaluation we share. So on the debit side, inakuja on the credit side. Tuko sawa? Ngapi? 400 to 40 na 160. Do you have any other account which affects the capital account? No. Zimeisha. So it was the good. And then tunamalizia sasa na huyu. We need to write this amount off. Unaona hii pesa? Lazima tumlipe, si kweli? So tunamlipia kwa capital account. So tunakuja tunaandika hapa bank. So bank which imetoka from current account. From current account. So we write it off here. So hapa tuna write off. So we write it off. So tukiandika tu hapo ndio tumeandika hapo 140. Ni kumaanisha hiyo pesa yake tumetransfer to capital account, so tutamlipa na capital account. Tujue balance yake yote ni ngapi, then we pay her from the capital account. So 140 pesa yake inaongeza. So alikuwa mwaka ikianza alikuwa na pesa hii pesa ya that 600 mwaka ikianza. Haya, goodwill ikamuongezea pesa. Revaluation fee because ilikuwa ni revalue run akaongeza tena akakuwa na pesa another extra of 40. Then our capital account ikaonyesha alikuwa na pesa ya 140, we need to pay him her. So tunaongeza tena hapo hiyo capital hiyo bank value so that tujue akona deni ya pesa ngapi, and then we write it off on this side. So tumeitoa hapa inakuja hapa. So hapa tumemalizana nao kabisa. So tunamlipa, so tunamlipa from current account to capital account. Tuko sawa? So let us see the balances. Umeelewa hapo? Ama nirudie tena? Rorin, umeelewa?
Mbona ana hakuwa na goodwill written off?
Hakuwa na goodwill written off. Nini hiyo? Goodwill written off.
For goodwill account ana hakutafutiwa goodwill written off. Kwa nini?
Kwa sababu yeye hatakuwa yeye tunapatia goodwill yake ya 800 na yeye anaenda na hiyo 800. So and then hawa wengine wakasema they don't want to prepare the goodwill account. So hawa wawili wakasema after Anna ameenda we don't need to prepare that account. So the balance inabaki we shall share them among the two partners. So Anna will not be there. So when we write it off, we shall write it off at the end of the year. So at the end of the year Anna atakuwa. So we don't need to figure for her na atakuwa. Tuko sawa? So the goodwill was to be written off. So what I write off kumaanisha Ann yeye anaenda tuna hiyo 800 yake ya goodwill, the rest will be written off to the two partners. Tuko sawa? Are you okay?
Yes, that's okay.
Yeah, na nikasema mwaka ikianza the capital account of Ann alikuwa na that 600. Tuko sawa? Then during the year wakavalue the goodwill. So goodwill kwa sababu ni pesa, when you value your goodwill you are supposed to be paid that amount. So goodwill wakavalue akaona Ann she's supposed to be paid 2,000. So out of the balance yalikuwa nayo that 600 tunamuongezea an extra 2,000 from the goodwill. Lazima tumulipe juu anaenda. And then we had valued our land by 800. So out of that 800 portion ya Ann ni 400. So hiyo 400 lazima tumulipe pia. Juu ni pesa yake pia. Tunamlipa 400. And then tulikuwa pia tumedetermine that alikuwa na pesa itafaa kumlipa in the bank. So we are supposed to pay her from the bank 140. Now hiyo 140 kuliko tumlipie hapa, we write it off here na ileta hapa. So tunaongeza hiyo pesa pia so that you know how much are we supposed to pay her. So let us count everything tuone tunafaa kulipa pesa ngapi. So tuanze na C. So that 200 plus 800 plus 160 inatupatia 4160. 4160, and then this one is balance. Carry down. Itakuwa ngapi minus 2,000? 2160. Are you getting 2160? Tuna kwa mwingine 3400 plus 1200 plus 240. Yeah, kuna pesa ngapi? 48. 40, lakini lazima tupe hiyo goodwill yenye ilikuwa written off. So yatabaki na ngapi? 2840. Aya, let us see sasa Ann mwenye analitaya 3600 plus 2000 plus 400 plus 140 akona 6140 to 6140. Now remember, we know it will not be our balance, itakuwa ni bank. So huyu lazima tumulipe now from the bank. Now the total amount now is supposed to pay her, including 140. The total amount including 140, because 140 tulileta hapa. So total amount that we are supposed to pay this person, the final amount we are supposed to pay this person is 6140. This is the total amount which we are supposed to pay. Ikoaje? How much? How is it? Na hapo kwa goodwill hamkuniambia nimekosea. Hapa kwa goodwill you never told me nimekosea. 5 over 10 times 4000 kwa goodwill ama ni kwa what? Iko sawa. Which part hiyo? Iko sawa. Iko sawa. Si ilikuwa 1000?
Yes.
Iko sawa.
Yes.
I think it's okay. Now I think now we can. So our balances is 2840 na 2160 na huko juu 20 na 20. I think that one is okay. I think that one is fine. So I think what is remaining now, nothing is remaining actually. Nothing is remaining. Now we can prepare now our balance sheet. I think now we can prepare our balance sheet. So let us see if our balance sheet is a balance. So let us see if our balance sheet is a balance. So that will be the final. Na hiyo ndio msema kweli. So that is what we do. That is the msema kweli. So tuombe balance. Tunasema tuombe fanye nini? Tuombe Mungu ibalance. Tuombe Maulana ifanye nini bwana? Haya, tunasema itakuwa ni so kumbuka nani sasa hayuko. So kumbuka partner A hayuko. So hatutaka partner itakuwa ni B and C statement of financial position as at. So inaisha mwaka inaisha kwa when as at that is June 2024. That year is June 2024. Remember it is in thousand. So tuanza the first one, tunaanza na land. Tunaanza na land pale juu. Now land was revalued to 3200. So the value of land is 3200. Kwa sawa. We have building. Now building the cost is how much? So ukienda kwa building the cost is 6400. Because it's on cost, ukienda the word cost, lazima less the accumulated depreciation. Ukienda cost, make sure less the accumulated depreciation for 80. Depreciation mnipe juu nilivuta. What was the depreciation? Depreciation kwa ngapi? 128. Sivyo? Was it 128?
Yes.
So 6400 minus 480 minus 128. 57.92. Kutoka kwa building tunaenda kwa equipment. Hizo ni non-current assets, kumbuke. Kumbuka ni tunaanza na non-current. This is how we're supposed to do it in your exam. So vile nachora hivi ndio utakuwa unafanya kwa exam yako. So non-current assets, so tunaanza na non-current asset kwanza. So tuko na land, building and then equipment. Equipment, so the cost for equipment, so also on cost 960. So get to the word cost, remember to write accumulated depreciation. So another name for accumulated depreciation is provision for depreciation, 220. And then what was the depreciation for the year in our 144? Was it 144? So 960 minus 220 minus 144. 596. Is that one correct? I think tumemalizana assets. I think we are done with all the assets. Now I think we can go to current assets. Let's go to current assets. And the first one we can start with is inventory and current assets. So current assets, we can start with the inventory because we know the inventory. Now the value of inventory in gapping. Information number one, the closing inventory, 1,800. So the closing inventory is 1,800 closing inventory. Now, did you have any accruals? The prepayments? I think we had a prepayment, Sivyo, of 100, Sivyo. So we have rent repayment. Repayment. Ilikuwa ni 100. And then we can now consider the others. We have receivables. So receivables, we need to do our working. So receivables, if we go to our receivables is 1368, we can go to balance. In our total balance, 1368. Now in our additional information, we had an allowance for, so that increase ilikuwa ngapi? Not an increase, the allowance itself. Walikuwa wamesema ni ngapi? 48. So the 48. So 1368 minus 48 nakuja ngapi? Ama tutaresi gani? Is it the increase or is it the... I think we are supposed to raise the increase. I think we are supposed to raise the increase. So the 8. Ama, what do you think? Hapo kuna kizungumkuti. So we have an allowance information number 6. That is an additional information. So allowance for refu debt was to be increased to 48. Are we supposed to raise ama ni 40? Okay, let's just raise 48. Then tutaangalia if itakubali kubalance 48. So 1363 minus 48 ni ngapi? 13?
I think 20. 20.
1320. What else do we have? We have a cash balance. Can you see the cash balance? Now let us pay this person. So kumbuka tunafaa kumlipa ngapi? So we can pay him from the cash or from the bank or from the cash. Ndio hapa. Unaiona hapa kwa capital account. So tunafaa kumlipa 6140. Now what is our balance ya cash huko juu? Cash yetu ni ngapi huko juu? 80? 84. Is that correct? Is that our balance from the statements? Cash at bank. Sio ndio balance tuko nayo? Ama mjeiona? Kwa toyo balance pale, kwa toyo balance iko pale kwa capital account. yake. Umpate umeiona 84.
Yes.
Now let us pay this person 6140. So itatosha. Now we want to pay her. Itatosha.
Haitoshi.
So haitoshi na awakashi basi hizi kuwa negative, si ni kweli? We cannot put a negative figure there, si ni kweli? Tuko sawa? Are we okay? Yes, so the 6440, yes, 84, the Kenya shillings 84,000, yes, tosha kulipa 6,140,000. Si ni kweli?
Kweli.
So kumaanisha our cash italipa hiyo 84, hiyo 84 itaisha. So sisi tunajua tumelipa 84. Then hiyo ingine tutafanya nini? Tutaboro. Tuko sawa? So tutamlipa hiyo 84, balance yetu baki 0. Then the balance tutafanya nini? We are going to borrow. Si ni kweli? Tunaweza borrow as a bank overdraft or as a loan. Whatever way you want to do it. So total assets. To find the total assets, so ni 3,200 plus 5792, 596, 1,800, 100. So mimi napata 12,008. 12,808. Are you getting that figure? Then I can go to capital and liabilities. So tunaanza na, we start with the current account. Current account, so we have B and C. So kumbuka A yuko, A retire, so we have B and C. So ndio huyu 20 na 20. Tunakuja naweka hapo 20 na 20. Aya, capital account B and C kwa sababu A retire. So A retire tunafaa kumlipa 6140. So 2840, 2840 na 2160. Aya, liabilities, we have payables. Now what is the value of the payables in our statement huko juu? Payables watuambia ni ngapi? 1624. 1624. 1624. Now we need to have a bank overdraft. Now bank overdraft. So because we need to pay this person. So remember, tulikuwa tumemlipa ngapi? Remember we had paid her 64. So out of 6140, tumemlipa 84. Ngapi imebaki? Tukimlipa 84. So out of, so tulikuwa na balance ya 84 kwa bank ya 84. So out of this 84 tumemlipa out of 6140 tumemlipa 84. Au balance yake imebaki ngapi tunafaa kumlipa? So that tuchukue loan tumlipe
656,000.
Yes.
656,000. 656.
Yeah, so that is, so tumechukua balance. Now hii balance tumechukua purposely tumlipe hiyo balance. So sisi tutabaki na loan. So kwa tutaweka huko kama loan. Tuko sawa? Lakini cash ilifanya nini? Iliisha. So tulichukua loan, so sisi tutabaki na loan kwa biashara yetu. So yeye ameenda lakini ametuacha na loan, but tumemlipa kila kitu. Iko sawa? Now add them together. Kama ina balance, well and good. Kama high balance, imeturamba. So kama high balance, ifanya nini? Imeturamba. Aya, kuna kitu moja tumewacha. There was an Owens. Ilikuwa ya ngapi? Si ni kweli? Kuna Owens tuliwacha, sivyo? Ilikuwa ya ngapi? Owens, we had an Owens somewhere. Ilikuwa ya ngapi? Across. We had an Owens somewhere. You better start that Owens. So make sure hujasahau kila kitu. Yes, ilikuwa ya ngapi? Owens, ngapi? I think we had an Owens. Ilikuwa ya ngapi? They are close. Ilikuwa na rate na nini? Ilikuwa ya ngapi? We had an Owens somewhere for general expense. Ngapi? Wewe umeamini nini? Yes, ilikuwa ya ngapi? Huyo na Jamii anaongea sana. Who is that? So Owens ilikuwa ya ngapi, Brenda? What was the Owens? 88. So we had an Owens on general expense ya 88. Now I hope this one will balance. So capital and liabilities. So are you getting the same answer as 12,808?
Yes.
So I think that one marks the end of retirement. So I think I have done my part for retirement. Now that is on you to do your revision. So I think that one marks the end of our class today. Elish Verir, leo umeonekana. So umeelewa?
Yes.
Nani mwingine? Let me see. Kuna watu hapa wamepotea. Nani huyo mwingine? I think Brenda was there yesterday.
Utakuwa shule lini?
Na tunakuja shule lini? Kuna nini shule?
Asti nataka kuconsult something.
Mimi nilikuwa shule hata leo. So you ask.
So unakwanga every day?
Sometimes, not every day actually, but sometimes. Leo nilikuwa na shughuli hapo kwa department. So maybe though nyinyi nikikuja you don't come, amkujangi. I think mwenye anakujanga ni Rafael.
Takuja, niko na swali kwa hii partnership, I think.
Okay, I remember but we have not finished yet partnership. We are supposed to do the solution and some other minor items. But for now, I think that one is okay. You make sure you follow up on what we are doing. The most important thing for partnership, when you're talking about admission or when we have a change in partnership, remember you need to value your goodwill. And in most cases, the goodwill is to be written off in most situations. So it is hard you find a question where the goodwill is to be retained. In the case the goodwill is to be retained, it will end up your assets as non-current assets. If the goodwill is to be retained, you shall not apportion to partners, but utaipeleka direct to the capital account. But if it is to be written off, then you need to adjust it with the capital account. So you need to adjust it with the capital account. So you credit what was there between the partners. Then after the sharing of one partner, then you need to do the other. So that is number one. Number two, when you're talking about, so that is for admission or the changes in partnership. For example, with the profit and ratio or the ratio sharing. Now, but when you talk about the retirement, now remember for the retirement, it's a bit different. You need to calculate the account of the valuation and the goodwill account at the same time. So you need to compute the goodwill account and the valuation account. So you need to remember that one. And then also you need to pay the partner mwenye anaenda kama hapa Anne was going. So we were supposed to pay her all the money yenye ameaccumulate from that partnership from that period. So kama yeye tuliona alikuwa na some amount which we were supposed to pay her. Lakini kwa our account we did not have enough money to pay her. So we had to pay her what was there in the account. Then the balance itabidi tumechukua loan. So tukachukua loan pale chini, we call it a bank overdraft, and then we paid her. So yeah, akaenda, sisi tukabaki na loan ya ngapi? Ya 60.56. So we took a loan of 60.56 to pay her. So that's all you need to remember. So you need to write off the accounts of the person who is retiring. So you need to write it off completely so that will not appear in the next period. So wakati una prepare this statement for B and C for the next coming year, then the balances yenye tutakuwa tumepata kwa balance ni itakuwa tu ya hawa wawili B and C. Ana atakuwa in the next period. That itakuwa hivyo. So I think that one is all about it for today. We don't need to waste a lot of time. So make sure you go and review the videos again and again because this is what we shall find in exam and you shall pass anyway. So I think that is all. Any person with any question? I think everyone is okay. I think everyone is okay. So we can end the class. So you can leave. So let me end the class. So we meet tomorrow. I think we shall tomorrow. We are supposed to do the solution, but I don't know how we shall do it. This dissolution because there is no any question in our past paper concerning the solution. There is no any question in the first paper which talks about the dissolution. Remember when we talk about dissolution is where the partnership is dissolved. So akuna, so at the end of the year, wakati mwaka inaisha, you are not supposed to prepare the balance sheet. So ukiambia to dissolution, remember you're not supposed to prepare the balance sheet. Kwa sababu biashara inaisha. So partners wana dissolve the business na wana share kila kitu among themselves na wanaenda. So kumaanisha at the end of the year wana share the land among themselves, wana share the building equipment, all this the liabilities will be shared among themselves, walipe madeni zote na wafunge biashara waende. Now, we don't have a question concerning that one in our first paper, but in our course outline, we are supposed to learn about the solution. So I'm looking for a question. I think I will look for a question in financial reporting. That is in intermediate. Because in intermediate, they also talk about the solution of partner. I think I will derive a question from there. Then we shall do it. That is the only option. But for now, up to the retirement, I think if you were to do any question from 2015 up to date, there is no question in our Sumbua. So that's all about it for today. Let us meet tomorrow. Let me look for the dissolution part, notes, and question, a good question from Kasneb past paper. So you have a lovely time.